Welcome to the Swing Trading with Cycles channel. We're going to do an update on gold, silver, and the gold miners, precious metals complex as a whole. It is February 4th, 2023, and this is a really important one because this is our first decline of the 8-year cycle advance. I'll say that again. This is the gold chart that we're looking at for the daily chart, right? So this is actually your 8-year cycle low right here. The daily, this is the daily chart. So, it happened on September 28th. And so we have now, and so here's the thing. This rally here obviously almost gave back all those gains, but it didn't. This is actually more like a triple bottom. And so if you just count from here all the way to here, we've been rallying. So is that from here to there? Right. So if you count this as just one little daily cycle that lasted 27 days, I mean, quite frankly, pretty bearish, right? It looked like you were going to make a lower low, but of course it didn't. And then since that low, so that was 27 days. And again, it was bearish. Like, look at that. It rallied for 5 days and then it declined for 22 days. Made a bottom on day 27, but it was a slightly higher low than this. And so this stands as our potential 8-year cycle low. And so we then started a new weekly daily cycle, which is the one that we're in right now. And we rallied for 65 days. And what is the percent increase that we got from that bottom? It's about 21%. So we rallied 21%. And I posted this on Twitter. If you're not following on Twitter, definitely take a look for the pinned comment. Basically, you can see we rallied here 21%, more importantly, about $340, right? 340 points. And so let's say we gave back half of that, right? Like, not to say that we will give back half of that, but like, it wouldn't be crazy to retrace 50% of the move, right? So that would be, what's my math on that? 170, right? Yeah. So that'd be about 170 points down. So something like that, right? So like something around just below 1800. This isn't an exact science. No reason why we couldn't even go a little bit deeper. I mean, you can see from here, if we drop down to there, this would still be a relatively healthy uptrend. And so again, this is really important because I think this is not just a daily cycle decline, but the start of a weekly cycle decline. And silver is telling us that. Also, the weekly chart for gold is telling us that as well. And so the stakes are really high here because this is going to tell us, is this level going to hold? Is this our 8-year cycle low, our sort of very rare kind of triple bottom? At the same time, you have the Dixie starting to its weekly cycle advance. I have a separate video about that. Definitely take a look. The way I see it, the Dixie is going on a bear market rally, right? That clearly has topped in its 3-year cycle, and it's in 3-year cycle decline. So it makes sense that while the Dixie drops into its cycle low, gold and the rest of its friends will drop into theirs. And so I want to just take a look at what happened after the last 8-year cycle low. So that was back at the end of 2015. And so you can see it's labeled here, right? That was your last 8-year cycle low. We've had separate videos going more in depth on this, so definitely take a look at the previous gold videos, link in the pinned comment. But we made that low here, and then you can see it's kind of similar in that we kind of meandered for, I mean, let's just see, how many days was that? So after making that important low, we kind of meandered for like 20 days, and then we started this move up. And so without marking, so theoretically, we haven't marked a daily cycle sort of here the way we did for the last one. But if we counted from the 8-year cycle to here, this rally lasted 71 days and it went for 22%, as you can see here. And so we're right in the ballpark. We went for 21%. In our case, it went for 65 days. Again, there was that low. So you can quibble over that. That's fine. But that kind of gives you a sense. But notice this bottomed on day 82. Doesn't mean that this one is going to bottom on day 82. It just gives you kind of a little bit of a sense. We could have a little bit of a decline here. And then you can see we have a little bit of the other thing I want to note here is this advance out of this 8-year cycle low, it took out all these highs. That's an important thing that you want to see. On the upside, you want to start taking out swing highs, right? So like getting above those swing highs. And when something is in a downtrend, you're going to see it taking out swing lows taking out previous weekly cycle lows. So in this case, we're taking out previous daily cycle highs and weekly cycle highs, right? And so again, so this first rally before the decline, before your first sort of recognizable decline, it took out this cycle low and also this cycle low, but it didn't take out this one. So the way of thinking about that is this is the last sort of local high for gold. Like, let's just draw a line there. Because we had this like decline, right? Like this decline, this like just ugly decline into this cycle low. And so it's just important to note that you didn't take out that high on the first pass, right? You had your little bit of a dip and then you made another higher high. You actually made a lower low below the low here. So that was a little scary. These are all important things to kind of note so that as we go through the next weeks and months, you know, you don't kind of panic. And we'll obviously watch the price action in and of itself, but this gives you a nice little like a nice sense of what could happen. I mean, look at this. This is really scary, right? We have a daily cycle that like fails. This is a weekly cycle low for sure. Takes out these lows by a lot. But what does it not do? It doesn't take out that one. It bottoms here. So we're going to want to see a higher low, something like this, right? Like that in real time. Once you saw this, you're like, oh, and look at this. And this low is coming after this huge decline. Like, look at this huge, I mean, actually from here, my goodness. So you're starting to, oh, wait a second, we just made a higher low. Now, again, it's a little bit scary because you're below here, but it just kind of gives you a little bit of a blueprint. So if we go back to where we are now, you can see that we took out all of these highs along the way, right? This rally up here, let's just draw where this rally kind of ends. So right there. So you can see we took out all these highs very easily. We couldn't take this one out. And we certainly couldn't take this one out, which was that March sort of peak, which wasn't an all-time high. It missed by a couple bucks, by $5. And so it's not crazy to think that we're going to make this dip and then make a higher high, right? Like you imagine we go below here and then we break out above that high, maybe another dip, and then we break out again. All that to say, the fact that we didn't just go up and make a high above 2,000 isn't necessarily the end of the world. Now, I will say, just kind of full disclosure, this seems like a pretty standard, like pretty clear that we're moving into a weekly cycle low. Let's move into the weekly charts. And so this is a high probability sort of bet in terms of like the downside. So I have taken a position to capitalize on that. There's no reason not to. And again, this is kind of like that blueprint. You could easily see a like 8-9% move down over the next, I want to say 4 or 5 weeks, because this is week 18. And we'll look at the silver chart. That might be telling us a little bit more as to how we kind of came up with this March timeline. That would be about a 22-week cycle. Of course, we could go longer for sure. But I mean, look at this. Big tell. This is a bearish outside candle. And actually, we'll go to the daily chart. Let's just zoom in. This is like the micro price action. This is important to understand. This is a bearish outside daily candle because it makes a higher high and then it also makes a lower low and it closes red. That was a big warning, right? That's the day that we made the high, day 65. That was a big warning. It's a high probability pattern, right? Like once this candle makes the high and then it starts to go red, high probability it's going to make a lower low as well. And then the other thing about that high probability is that you usually get downside after one of these, right? Because what this is a false breakout. People, like we had buyers come in above this high and couldn't sustain it. You know, kind of like a plane stalling out. You know, it just kind of crashed through. And then usually you get follow through. And look at that. That's big follow through. Not much of a wick. Closed pretty close to the lows. So to be crystal clear, this is a swing high now. Below the low of this candle. So the low of this candle is 1911.35. So that becomes a really important level to recapture. It makes this a false breakdown, kind of on the upside. So that's the daily chart, this bearish outside weekly candle, and look what it does to the daily candle, and look what it does to the weekly candle. That's how it works, folks. The multiple time frame analysis. If you have a bearish outside candle on the weekly, pretty good odds that you had one on the daily that was strong enough, got enough follow through that it became a weekly bearish outside candle. And so think about that for a second, folks. What we said, high probability that this pattern sees follow through. So what do you think we're going to get next week, right? This isn't a prediction. It's just the probabilities suggest we're going to get downside, right? Like maybe something like this, right? So analogous to what we saw on the on the daily candle. Now, it's entirely possible that somehow we have some kind of crazy move like that next week. That would be crazy bullish, big buy signal, and you'd have pretty clear place to kind of put your stops. But what is the likelihood we're going to get a candle like this versus this, right? If you think about the odds, the odds suggest that this candle is much more likely than this candle. Of course, we'll see what happens in real time, and we'll be able to react to it because we'll see how that Monday opening comes through. And if we look at the monthly chart, really important to note that we are still green on the month. And I'll just remove that visibility from the monthly. We're still green on the month, and always important to know where a candle opens because it tells you when a candle is going to go from red to green. So the monthly candle opened at 8:23.58. And so once we go below that level, we now have a red monthly candle. And not to belabor the point, but I hope you can see this now. This is how a bearish outside candle begins to form, right? Think about that. It's this, we saw it on the daily, whoop, and then we saw follow through. We saw what happened on the weekly. Now, if this thing gets really heavy, this decline, we would see this candle complete the move and become a bearish outside. Oh, this is actually a monthly chart, so the picture is actually much worse. Oh, excuse me, this is actually a quarterly chart. So let's flip this over to the monthly. Okay, right. So we're actually much closer to becoming a bearish outside candle than it would seem. So again, we made a higher high. So we're already red for the month. So the opening for the month was 1928. So the quarter opened at 1823, and so the quarter is still green. If we go below that 1823 level, that means the quarterly chart, the quarterly candle becomes red. Also not something that we want to see. So again, the big level would be if we get below 1823, which is the low of this candle. That makes this a bearish outside week monthly candle. Again, I hope you're seeing this, right? Like the idea would be that this would just extend down like that, something like that, right? It happened on the daily, happened on the weekly. Now it is potentially going to happen on the monthly. That wouldn't be the end of the world, though. This is your 8-year cycle low here, this candle here, this September candle. We need to stay above 1735. So you could even see a world where it gets all the way down to like here and then still rebounds. As long as price remains above here, we still have a potential 8-year cycle low in place. And in fact, price could even fall below here as long as it recaptures. That would be your goal signal. That would be a false breakdown, actually. So very important here, our first weekly cycle decline of the 8-year cycle. That was the picture for gold. Let's move on to silver, and then we'll also look at miners. We know silver is where a lot of the beta is, and it's really a very similar pattern to gold here, right? So this thing poked up and made a higher high on that, the 20 on the second, the day after the Fed meeting, and that became So this is actually an important pattern to understand as well. This actually didn't become a bearish outside candle. It didn't make a lower low below the previous low, but then it finished the job this week, right? Or the next day. So it's like when you combine these two candles together they become a bearish outside candle. I guess if we look at them on the 2-day, right? So the point is, you can kind of, if you can see that, right, this candle plus this candle together is an outside candle of really all of this stuff. So we consolidated for like 60 days here, and now we're breaking down. Obviously, there's a possibility that this is just going to become a false breakdown, and we see some kind of monster candle on Monday like that, something like that. And then there's follow through on Tuesday, something like that. And then there's more follow through on Wednesday, something like that. But then you ask yourself, how likely is that, right? That's the real question. So as always on this channel, we focus on what's most likely, not what we want to happen, but what's most likely to happen. What is, what do the odds say? And this is probably more unlikely, right? Like I'd say this is very unlikely. That is probably more likely. And maybe we get a little bit of consolidation. It's not like a cascade lower. You get something like that, right? Maybe even something like that. And then, whammo. And this is just a scenario. You could get something like this, right? Where we sort of meander lower into a daily cycle low. Now, again, most importantly though, I'll delete these. Let's get them out of the way. is this weekly signal. So, and this is interesting because we talked about this already. This is the same kind of pattern as gold where we made a bearish outside candle. And same kind of idea for gold. I think it's just a good ballpark. If you think about the rally was just about $7. 39% incidentally, so pretty hefty percentage wise. And so if we decline for about half of that, that gets you down to around $21, and I suspect we probably undershoot that. So it just gives you a ballpark. Again, you can kind of see price coming down there. I mean, that's a big red candle. We probably get a little consolidation next week after that kind of big move down. And really important to note, right? We talked about this for gold. This is a bearish outside monthly candle for silver, right? The candle makes a new high above the January high, right? Because we just made a new high that previous day. That was your high for the month, right? So that high is at 24.628, and last month's high is at 24.541. And so this is not a great sign, right? Because what usually follows, as we just talked about, what usually follows a bearish outside candle is more downside. So you might expect something like this for March. For March, but maybe it gets a nice little lower wick, a rally towards the end of the month to close it out, to give us our ICL, something like that. We'll have to see. And what does the quarterly chart look like? Have we gone red on that one as well? Ooh, yeah. So we're red on the quarterly chart. And of course, the quarterly chart closes next month at the end of March. And so the really bearish scenario would be the quarterly candle becoming an outside candle. So stretching down to that, right? And so the low for the previous quarterly candle is $18 even, basically. So that tells you kind of a, worst case kind of doomsday scenario for silver. I do want to just quickly look at what did silver do coming out of the 8-year cycle low. Let's go back to that monthly chart for gold, right? Because we know, again, they're correlated. And so that was your 8-year cycle low for gold right here, December 2015. And what do you know? Not surprisingly, silver rallied, right? I'll get rid of the drawings. It's a little hard to look at. But what do you know? Silver rallied, right? Quite a bit, in fact. And then we pulled back. What kind of low is this? That's right. It's a higher low. And you can remember from the gold chart, there was this big pullback as well. So that's your pullback for silver. Holds a higher low. In fact, double bottom like right around here, right? And then we kind of roll over and make another lower low. So notice this low is actually, and this is at your 2017 low, this low is lower than this, but not lower than that, right? So we're kind of preserving the 8-year cycle low. Again, think about it as like when gold printed an 8-year cycle low, silver printed a major low as well, and I know I've added the drawings back. Now, if you just look, we kind of meandered for many months, and then this is your COVID month. That's March 2022. So we broke down below the 8-year cycle low for silver, and not to say that silver has an 8-year cycle low, but call it the major low that silver made when gold made an 8-year cycle low. So gold got nowhere near making a new low, but silver did. So silver was weaker, and so that's just important context. It wouldn't be shocking if we saw a move where silver broke down below this. Now, obviously, COVID was a big exogenous event that, it's gonna do things that are atypical. But that's just something to be aware of. That swing low level for silver, though, to be clear, is basically $20 even, right? So above $20, we have a monthly swing low on the board, and we have a potential long-term cycle low. So let's look at GDX, and then we'll look at some ratio charts and kind of close this thing out. So GDX, big swing high. They're all kind of doing a similar thing, just different days per se. And with GDX, it looks like it made this daily cycle low here on day 31, and then it kept running. So what is that day? So 24, right? And in some ways, GDX was a bit of a tell, right? Because, and we'll look at a ratio chart, which kind of instantiates that point. This is a vicious, double top / lower high. I mean, look at these two candles, right? Let's zoom in. Let's make sure everybody can see this. This is the candle that marks the high. So the high was $33.34. That was on day 24. And notice we got consolidation the next day. So we didn't make a new high or a new low. That's called an inside candle. And then we made a new low and then another new low and then another new low, but we went green. So we're rebounding. Oh, we're rebounding. Just to be clear, I'll just draw this out. so we can see it, so we can all make sure that we're looking at the same thing, folks. So we have this move up, then we have this move down. That's a higher low because it doesn't go below that previous low. And then we have this move up. It's like, okay, we're going to make a higher high, right? No, we're not. We're going to make a lower low. You see that, folks? Right? Higher high, higher low, just barely, lower high, slightly lower high / double top-ish, and then a lower low. And so just to be crystal clear, the expectation is at some point we'll get a little bounce and another lower low, a little bounce and another lower low. That said, if this is a bullish, if we did get the 8-year cycle low, we'll expect that this will make a higher low as well in terms of where it bottoms. So that was day 24. So this is 25, 26, 27, 28, 29, 30, 31. So we're on day 31. So getting late in the daily cycle, but also we're in weekly cycle decline. So that's important to understand that we will probably get some kind of bounce, like that's your daily cycle bounce, something like maybe even all the way up to here before the next leg lower to continue the weekly cycle decline is the expectation, right? Let's look at that weekly chart. Let's look at the weekly charts. So very similar to silver, except here's the thing. This wasn't a bearish outside candle because it didn't make a higher high. But if you combine this candle and this candle, so the last 2 weeks candles together, that combined is a bearish outside candle of all of that, of these two candles. So these two candles combined, right, versus these two candles combined, these two are bearish outside candle. And so GDX is topping out on week 17. Oh, and I'll go back to silver really quickly. Silver tends to have these weekly cycles that are like between 25 and 27 weeks. And so just a super high level estimate here, right? If we were to get to a 27-week cycle this time, it would be a bottom on the week of March 6th, which is why I'm using that as my base case across precious metals. That can obviously change. We'll be evaluating price action in real time as it develops, but you could see a world where that's where we get our low. And so that's what you remember from the gold chart. It was the same kind of timing band. And for GDX, if we got that low on that day, that would be about a 23-week cycle, which is not, this thing kind of bounces all around. Like this last cycle was 35 weeks, really long. Previous one was only 17. The one before that was 30. So it kind of goes all over the place. And in terms of GDX, just again, quick mental model estimate for you to have in your head. How long was the rally, and what's a 50% retracement, just as a huge ballpark? So we rallied 54%, very strong rally. That was $11.71. So that gets you to around something like $6 in that neighborhood. Decline to be a 50% retracement. That would get you back to around $27.78. Again, these are like really high level ballpark numbers. Also. The monthly chart for GDX is red, similar to silver, although in this case it's an inside month. The low from last month was 29.25. Almost certainly we're going to break down below that, and that's my point here. That's another dollar down. This is a very high probability trade in terms of these levels down, and so even if you are long-term bullish, you can still make some good money being short-term bearish, right? Short-term. We're in a downtrend right now, and so you can make money, picking at the levels as they go down. For GDX, that major cycle low in September happens above 25.71. So you think about that, we could drop all the way down to like 26, and this would still be okay, more or less, right? So that's even from here, that would be about 16%, a 15% drop. So that's interesting. We might actually test that level. So that's GDX. Let's look at the ratios. We'll look at GDX versus GLD. So that's the miners versus gold. And so you can see big swing high, same kind of thing. I believe that is week 17 as well. And so you can see, yeah, right. So that is, let's just measure that really quickly, folks. So that was your, yep. So week 17, it made a high, and this week here, it just broke down. So this is important because these ratios should have their turning points around the same time that we see the weekly cycle low for silver, for gold, for GDX. So we should expect this thing to bottom at the same time the GDX does, silver does, gold does, and continue a rally up. That's the point of these, right? That it's another factor to kind of track that gives you a sense of the direction of the move. So this one we want to continue an uptrend. For the gold to silver ratio, look at that. Wow, that is a weekly chart of the gold to silver ratio. Notice it didn't quite turn into a bullish outside candle on the weekly, but it's heading there to be a compound candle. Look at that monthly. Ooh. And we talked about this, that the gold to silver ratio seems to be in a long-term cycle decline, having topped out on month 19 of this new long-term cycle. Here is where the rubber really hits the road, though, folks, right? Like, is it going to make this high, low, high, low, high, low? Ooh, big high. This is a scary low that tells us maybe we're in weekly cycle or in long-term cycle decline. So how long does this rally go before it gives us a new low? Or is this the real deal and this thing is actually going to just start a little uptrend? If it did, that would be very bearish for precious metals. So to recap, this is the gold to silver ratio. So when this thing is rising, it means gold is outperforming silver. It's very easy to understand in your mind in terms of the mental model. If gold and silver are going down together, silver always goes down by way more. So gold is going to outperform. So when all precious metals are going down, this thing is going up. This was your move before the COVID rally, right? Look how this thing just kind of spiked up. And so we want to see this thing turn down to have a sense that, okay, it's safer to get back into the water. And so I think that's the last ratio. Oh, we'll look at GDX to SPX, right? That's an interesting one. We'll look at GDX to SPY, same diff. And so we had talked about how GDX to SPY was, look at that, nice little up. This is the monthly chart. Nice little uptrend for the last 3 months. What is this? Look at that, folks. That is a lower low on the monthly chart, which makes this a swing high, folks, right? Below that level right here. This is a ratio chart, so this is looking at GDX versus SPY. When this is going up, it means GDX is outperforming. So you can see GDX has actually been outperforming for the last 3 months. Not anymore. We're starting a little downtrend potentially. So it's going to be interesting to see. And more importantly, or I should say equally importantly, look at that. Look at what this is set up. It's set up yet another potential lower high, right? Look at those. Look at all these arrows. They're all at lower and lower levels. This one's lower than that. That's lower than that. That's lower than that. That's something to watch for. So again, all of these would theoretically turn together when we get our ICL printed for the precious metals. Yeah, so we'll be watching for this, and of course, again, all those other things turning. I mean, wow, look at that weekly chart for that ratio. But again, I mean, look at this, like massive outperformance for GDX. And that, I mean, again, as I said in previous videos, we're talking about gold mining stocks outperforming the broader market. That's fairly rare. I mean, you can see from this chart, like it's been down only for a really long time, and we've only really kind of started basing. So it will be very interesting. And so very clear, we are starting a multi-week decline for the precious metals, for gold, silver, for gold miners, silver miners. And at the same time, the dollar is actually starting a rally, a multi-week rally. Talked about that in a separate video about the dollar specifically. But again, the dollar has made a 3-year cycle high as of September. It's hard to imagine how much, like there's not really much more the dollar can do to tell you that it did that, right? I mean, look at that. It's broken below previous swing highs. It's broken below this level. It broke below this high right here, the previous week 3-year cycle high. And so if gold is now declining into its 3-year cycle low, as I suspect it is, then doesn't that make sense that precious metals are advancing in a long-term cycle? Maybe it doesn't, maybe it does, maybe it doesn't. We will know from the price action, obviously. And so really pivotal next few weeks and month or two coming up. And what I'll ask is take a look at the link in the description, or excuse me, a pinned comment. I put this poll up on my Twitter. Just kind of want to get a sense for people's sentiment, right? Like, how are you playing this decline? Again, it's important to know that the decline is happening. Just to be clear, folks, this is not a prediction of a decline. This is stating that a decline is in process, because we can see that from the candles. You all saw that with your own eyes. We're making lower lows on important time frames, right? And so how are you dealing with that, right? Are you remaining invested? Are you selling and or hedging, right? Are you going outright short, right? Or do you have no position at all? Maybe you're waiting for the right time, which is awesome, right? That's going to give us a great buying opportunity if we do make a higher low. Obviously, there's a possibility where we don't make a higher low and it becomes bearish, right? And gold makes a beeline to 1450. Well, guess what? You can make a lot of money if you sell gold around 1750 all the way down to 1450, right? So either way, there's going to be an opportunity to make money here. You just have to be data driven, control your emotions, and be patient. We're going to talk about all of this in great detail on this channel and on Twitter, so definitely follow if you're not. So we'll wrap it up there. Thank you all for watching. I know this was a longer video, but it's an important, pivotal time right now. Make sure you understand the levels, folks.